Alright everyone, Cowboy Trades here, welcome back to the channel for another update. So, the FOMC minute meeting is coming out this week over on Wednesday at 5 PM Eastern time. Here's everything that you need to know in advance of this. Now, if we start off the video over on the Fed futures, you can see the Fed futures are actually starting to price in a terminal base rate at 5.15% for the US interest rate. So right now we're currently at 4.75% for the interest rates. This would imply about another 8.5% increase or another 40 basis points in the immediate short term. This is the 30-day Fed futures. So, you know, really this is talking about the next month or two for the next FOMC meeting. Now, if we also check out the meeting probabilities, you can see that futures are now showing a 21% chance of a 50 basis point increase coming in March. This is also reflected over on the CME Chicago Mercantile Exchange Fed tool. Previously, these were coming in around about 1%, but now it looks like the markets are starting to get a little bit panicked after all of the most recent Fed commentary, which we did discuss over on the channel 5 days ago on the Fed commentary update. We had a lot of Fed officials come out with a very, very hawkish stance on monetary policy, and since then the Fed futures have been moving to the upside. And once again, if we are looking at the meeting probabilities, you can see the likelihood of us topping out round about 525 to 550 basis points, also known as, you know, around about a 5.5% level for the US interest rates, is looking like the most probable cause at this moment in time. So if we are looking at where this would likely take us into, the probability of us coming up to 550 basis points is looking very, very likely in June or July. Now, with this, like we've been saying, you know, the Fed has come out extremely hawkish recently. So if we were to move up to, you know, round about this 5.5% ratio, this would imply another 75 basis point increase. And this is currently just what the futures are reflecting. Now, these can move up more and more and more if we do get more, you know, CPI data that comes out. For example, recently on the channel, we talked about CPI data being revised hotter than expected. We also had a hotter than expected CPI come in the other day. So, you know, with this, the Fed came out and they came out more hawkish than they previously were. All it takes is another CPI miss for the Fed futures to start pricing in not only another, once again, like we said at the start of the video, not only another 2 or 3 Fed rate hikes if we are getting 25 basis points, but this can continue to push up further and further if we keep on having these CPI misses. Now, since we've had these probabilities move up to the upside for 50 basis points, since we've had Fed futures price in a higher terminal rate, since we've had this most recent Fed commentary update, it seems like, you know, the cryptocurrency markets are having free reign to move to the upside, which is very, very strange, because if we are coming over to the equity markets, the bond markets, we're seeing something completely different. Now, really, since the Fed came out, you know, once again, 1, 2, 3, 4, 5 days ago, you can see this is exactly when the Fed started to talk. We saw the S&P 500 mini futures break down from this trend line. If we do also get rid of this very quickly, come over to the weekly time frame, you can see, like we discussed in the most recent video, this is basically a bump and run pattern where you've established a low, you've come up, you've had a bump here, and, this is the bump pattern where you've started to bump up from this trend line, and now we're having a run to the downside because we've broken this trend line to the downside, we've come up and back tested it, and we're starting to move down. Basically, every single time, every day I refresh and look at this chart, you can see the S&P 500 mini futures are breaking further and further to the downside, and this is all happening while the cryptocurrency markets, if we come over to Bitcoin and look at this in comparison, you can see the Fed started to speak here, the equity market started to break down, the bond market started to break up, but Bitcoin has actually broken up and we're coming back to this 25,000 level. Now, I have just made a separate video. It hasn't been published at this moment in time. I will edit and upload it just before this video, but Bitcoin, the cryptocurrency markets, are sitting at historical resistance. The 200-week moving average and the previous macro high around about 25,000 is right above our heads, and this is looking extremely worrying. If you want to learn more about my thoughts about that, then check out my previous video, but this is really focused on the equity markets and the bond market. So the S&P 500 is breaking down, the SPX as well is breaking down. If I can find the chart, you can see right over here we've had a very similar pattern play out. Obviously the futures are open slightly more frequently than the SPX itself, but what you can see is over on Friday we did gap down for the S&P 500. 500, and we've also broken beneath this trend line. So and also, you know, if we come over to the weekly time frame as well, this is the same kind of chart. We're seeing the same bump and run pattern right here, where we've had this bump up to the upside on this uptrend, and now we're starting to break back down to the downside, and it looks like we're going to be coming down and filling, you know, some pretty significant price targets that we've been talking about on the channel for the, you know, past couple of weeks or so. So heading over to the bond market before we do wrap up this video, if we are looking at the US government bonds on the 10-year scale, like we talked about in the most recent videos, this is looking like it wants to break up to the upside and explode to a rate of 4.5%, which is in correlation to the 1.236 Fibonacci extension all the way up here. Now you can see this is a beautiful bull flag that we have broken up to the upside of on the 10-year government bonds, and also the 2-year. You know, this is basically a risk-free investment. This is offering an APY of 4.65%. So often when this happens, when you get a really nice return on, you know, zero risk investments such as government bonds, these normally work opposingly to the S&P 500. So of course, you know, if government bonds are offering you a really low rate of investment, you're going to look for investments elsewhere. You're going to invest in equity markets, you're going to invest in the cryptocurrency markets. But when holding cash becomes profitable, and, you know, when holding cash potentially, if we come up to this extension, becomes profitable at a level of 5% per year, do bear in mind this is on a 10-year yield scale. So if you are locking in this bet, you are going to be getting a 10% return when this 2-year bond does expire. You know, getting a 10% return in 2 years on a risk-free investment. No wonder the equity markets, no wonder the cryptocurrency markets are breaking down on the higher time frame. But I just wanted to show you, for those of you who don't know, you know, these bond markets are literally, you know, zero risk investments, or as close to zero risk as you can get. These are government bonds, of course, but with this, you know, once the profitability of holding cash / government bonds goes, you know, all the way up to 5%, then of course, you know, investing in the equity markets when you're approaching, well, when you're basically sitting at historical resistance is not going to be a good sign, especially with the economy in the way that it is at this moment in time. So of course we talked about the 10-year government bond going to the upside, and the 2-year government bond is actually exploding much faster right now than the US 10-year. So if we do come over to the yield curve and we do look at the US 10-2, if you want to learn more about how this is calculated, what the yield curve actually does, be sure to head over to my YouTube channel, click on my playlist. If you do head over to my educational series right here, we have made a video on this called Understanding Market Conditions, where we discuss everything about the US 10-2. This is basically the yield spread between the US 10-year bonds minus the yields for the 2-year bonds. And the reason why we look at this is because the 2-year government bonds always pivot before the 10-year. So when we finally start to see this explode to the upside, we probably know that it's the right time to get back into the equity markets. But until then, if the 2-year government bonds, you know, these lower time frame yields keep on, you know, presenting us with things like 5% APY for 2 years, then of course, you know, you've got the valuation of the 10-year going up, but the 2-year is going up much faster. So, you know, this is simple math. If you take away 10 minus 2 and 2, you know, this number here keeps on increasing, then of course this scale is going to go to the downside. And right now, this is sitting at minus 0.8, and it's looking like this does want to continue breaking down to the downside. So, you know, with all of that said, with the yield curve continually breaking down to the downside, this moves absolutely in tandem with what happens in the S&P 500. You can see these move one and the same. The yield curve breaks to the downside. This basically means, you know, lower time frame bonds like the 2-year government bonds, holding cash becomes extremely profitable, and with that, you know, investing in the equity markets during these risky financial times becomes less and less secure, and less attractive of a bet, at least in my opinion. Personally, government bonds are looking quite nice right now. I personally don't really hold these. I normally just counter trade these. So, you know, I look at the government bonds to tell me when's the right time to short or long the S&P 500 and your cryptocurrency markets. And it's looking like at this moment in time, you are having, you know, Bitcoin approaching this historical resistance level, and you're also having the equity markets breaking down from some significant uptrends. So that's basically all you really need to keep your eyes on with the FOMC minutes. I will keep you up to date on this over on my Twitter. So if you do want want to stay up to date with what happens over on Wednesday, be sure to follow me over on Twitter at 618_cowboy. I will post all of the main information you need to know about the FOMC minutes. I will be having kendo training over on the day of Wednesday, so I won't be making a video on Wednesday, or at least I won't be making it after the FOMC minutes comes out. I will potentially make a video coming out over on Thursday, but for times like this, I will keep you up to date over my Twitter, so be sure to come and follow me over here. For today, that's all I really want to update you on. Coming into Wednesday, it's looking like the markets are starting to price in the probability of another 2 or 3 Fed hikes over the next few months, so I'll keep you up to date on that. That's all I've got for this video. As always, my friends, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and if you do want more of my posts, or when I am away from the markets and I do need to update you on things like the FOMC minutes, if you want clear and concise breakdowns of all the important information, be sure to head over to my Twitter at 618_cowboy. Also, be sure to come and join the Discord. If you head over to the YouTube, click on my About page. You can see all of my official links for Twitter, Discord, Instagram, and the merch store are down below. But for today, that's all I've got. It's been your boy Cowboy Trades. I'll see you tomorrow. Peace.